This is the Smart Mortgage Show. Glad to have you. I'm Ben George with Bill Linton. He is Regional President at Cross Country Mortgage. Got a good show for you today. We're going to get a market update, as we always do, from Bill, talk about kind of where rates are, inflation, some other economic data that Bill and his team are tracking. Plus, we're going to talk about the three maybe underappreciated benefits of working with a mortgage lender, and we'll talk through Bill and his team at Cross Country, kind of the things that they provide, services that you might not think of necessarily, and qualities and characteristics of the operation that you might not think of, but are a big benefit to people that are working with Cross Country. And then, of course, we'll go to the mailbag. We'll answer a couple questions today that you are asking about, so it should be a good show here today. Bill, welcome in. How are you?
Hey, Ben. Doing great. It's been hot up here, and I kind of love the heat, so it's been fine with me. And, just trying to navigate our market here. It's been still a little bit, I think, out of equilibrium is probably a good way to put it.
Yeah, it seems like it's been maybe that way for a little while, right? So, as we always do, let's start off with a bit of a market update here.
It's time for the market update.
The dog days of summer are upon us right now, and rates, I guess, have kind of stayed pretty steady, right? But I know inflation has been down. It's starting to creep down, it seems, month by month.
Yeah, so the month-over-month inflationary measures, CPI, core CPI, are coming down. So that's good. It has not yet translated to mortgage rates coming down. So mortgage rates are still in the upper sixes, in some cases over 7, depending on your credit score and other factors. So what we think is that they are definitely going to come down because the Fed is working really hard to curb inflation. It's one of their two mandates. They have two mandates. One is keep inflation at 2% over the longer term and to maximize employment. And so there's still talk because some of the economic indicators are still running a little bit higher or hotter. So there's still talk of the Fed raising interest rates at their next meeting and possibly even one more time before the end of the year. So interest rates are sensitive to that. Mortgage rates, 30-year fixed rate mortgages in particular. So, or 20 years or 15 years. So because of the pressure that the Fed might still exert, the upward pressure on rates, they have not yet come down. But we feel like in the longer, the mid to long term, 6 months to a year out and further, we think rates are going to continue to or really start to come down as inflation continues to come down and maybe the economy slows down a little bit, supply chains get back to normal. So we're going to trend in that direction, but we hoped we would be there sooner, and we're not there yet. The rates are not coming down as quickly as we had hoped.
You're probably feeling this as well, but it just seems like there's this, you think you said lingering, like this lingering kind of just this haze that's over us, kind of like those wildfires have just kind of sat on different areas of the Northeast. And it just seems like we've been here in recession for a little bit, that this could be on the horizon. And just, it seems like this is just dragging out longer than maybe many people thought it should, rather than us getting to maybe a conclusion or just getting the worst behind us and moving on. It just seems like we just can continue to drag on and drag on.
Ben, it's a really good point. And, if you stop and think about it, so remember in March and April of 2020 when COVID first hit and they said, hey, we're going to do a 30-day lockdown essentially, right?
Mm-hmm. Right.
Well, when they said that, I think myself and a lot of other people were like, okay, in 30 days we'll be okay. And it obviously went on far longer than that.
Right.
So when you have a global pandemic that had the impact that COVID did on trade, supply, population, healthcare, and then you have governments around the world pumping, trillions and trillions of dollars into the system, that hangover does not go away overnight. From an economic standpoint, the global trade has changed forever. There's tons and tons of companies getting out of China in droves because I think they realize there are serious issues with putting all your eggs in one basket. So COVID changed a lot of things, and you said it perfectly. There's a haze that's still hanging over us. Some of it's never going to go away. We hope that the inflationary piece, which unfortunately affects all of us in a big way, right? You go to the grocery store, everything I buy, I'm just like, wow, stuff's twice as expensive. And we hope that gets more in line, and it will. It is taking longer than we thought.
It is taking a while. I saw an interesting maybe tweet, I think it was, but just talking about kind of where mortgage rates are and the amount of home you get now and the interest you'll pay. But I saw that in 2021, a 30-year average fixed rate of just around 3%. A $400,000 mortgage you would have cost you about a little over $600,000. At the current rates, or when rates were around 7.5, 7.6, it would cost you over $1 million. It's just a crazy situation we've been in, and probably one that you really haven't seen much. But it just got me thinking, like, what inventory was already kind of low, right? As it was, the demand's been pretty high. But what happens in this? Like, what gives first? Is it people that are still willing to move and buy their home, or is more inventory come on the market? Like, what is kind of the tilting point here? Is people say, oh, I've got a 3% mortgage, I don't know that I want to move necessarily, although we talk about reasons why you don't necessarily want that to kind of keep you in place.
It's a great question. And there's been a lot of studies done on this exact question. So what we're seeing right now is the people that are moving with the rates in the 7% range, they're the have to move people. Not the I want an extra bedroom, or we want a little more land, or because that want is not as great as, I've got to give up a 3% rate and change it into a 7% rate and pay that much more interest, like you just mentioned, right? So those people are staying put. The inflection point is 5.5%. is what most studies are saying. At 5.5%, a lot of families are going to decide that it's time to move again. And what we see right now is a lot of first-time home buyers, because the first-time home buyer, when you look at renting, even at these rates, it's still much more economically advantageous to buy versus rent. So those are like the people that almost have to, because renting is just so lopsided. And, as you've, I'm sure, heard from friends and family and people renting is just so expensive right now. You can certainly own a home with a payment based on a 7% rate at a much lower payment than you can pay for in rent in a comparable property.
Yeah, it's a crazy time right now, for sure, and it's not easy on a lot of people. And hopefully that you can get the help that you need to find that next mortgage that you're in. Bill, the one product I wish it existed is we could just transfer that mortgage I have right now at 3% or 3.5% to my new home. If we could just invent that product, we could just transfer that mortgage rate to our new home and our new purchase, it would just solve all the issues.
So there's something similar with an assumable mortgage, which FHA and VA have, which means that the mortgage that's 3% on 123 West Main Street can stay on that property. So that is something that is available with, a small percentage of the loans out there. There are problems with that acquisition of the loan. So we rarely see people do it.
Yeah.
So a portable mortgage, as you've mentioned, would be a very interesting concept.
It would be awesome. I mean, it would definitely incentivize a lot more people to be active and get out in the market. But anyway, I digress. We'll keep an eye on the market and inflation and the rates as we move forward. If that 5.5%, that's interesting. That's kind of the inflection point you've seen from studies. So something to keep an eye on, and we'll track while we're moving forward. But if you have questions for Bill, want to follow up with him, talk about mortgage opportunities, what options are out there potentially for you if you are in that, hey, I need to move kind of spot right now, and you're looking for a home and need somebody to work with, Cross Country Mortgage can definitely help you out and benefit you. You can get in touch with him in a couple different ways: over the phone at 484-352-4151 or online, smartmortgageshow.com. All right, Bill, let's get into our main topic today. And we talk about the different ways that you help people with their credit and help people with their rates and to get in the best loan option possible for them. There's these very tangible things that we talk about here on the show. But what I wanted to get into with you now is some of these underappreciated benefits of working with a good mortgage lender, right? Not everybody's the same, but when you find a lender that you trust, that you can work with, that you have confidence in, there are some pretty good benefits to that, right?
Yeah. So there are a lot of lenders out there. They procure their client base. They obtain them from just flashing interest rates online. There's a lot of different ways that can play out as to why things are different. And I don't want to take too much of a deep dive on that today. But what I do want to mention is the intangible piece. So our business and the way we choose to work, because I always say we could institute that type of a strategy if we wanted to. But the way that we work is very relationship driven. So all of our customers are either previous clients that we've done 2, 3, 4, 5, or more loans for, or people that were referred to us by their real estate agent, their CPA, their financial advisor, friends, family, coworker. So when it's relational, one of the things that tends to happen is we take a deeper dive. We want to understand, why is it that you're thinking about moving? Why is it that you want to go from this area to that area? Why is it that you're willing to spend more on this house? How do we structure that? What are the long-term and mid-term and short-term financial goals that are going to help us understand the best mortgage? And, one of the questions that, or things that when I ask that question, I hear sometimes is like, I want to put as much money as I can in the market and I want a 10-year mortgage. And we're like, those two things are direct opposite, right? So we need to figure out what really is your goal. My parents' goal was pay the house off, get rid of the mortgage. And the most financially savvy people I know these days, they have a mortgage. Hopefully the rate they have is a lot lower than what they're making in the market. With the right financial advisor, you can make 8-9% in the market. And at the same time, if your mortgage rate's 5%, now you've got a delta. You're making an extra 3% on that money. So having a relationship, diving deep, not just being what we would call, in probably any industry, right, as an application taker, like, what's your name? What's your social? Okay, great. We'll shoot you something.
Right.
We want to understand the full picture. And so relationship's a big key.
Part of the relationship process and how you build those relationships and that trust is through communication. You kind of pointed out a lot of those questions you ask and a lot of the things that you dive into to find out what's going to be the best option for someone, right? It's not just about, as you said, let me jot down a couple of numbers. All right, here you go. Here's your solution. Communication is kind of where things begin, right?
Yeah, so it's definitely communication. And the way that we kind of look at communication is more like, I think some people or some industries or some companies might, consider the communication to be like just going down this list of questions. For us, we look at it as a process of discovery, right? And a lot of times one question leads to another question, leads to another question, we get to the bottom of, okay, this is really the goal. This is what so in that regard, we're always trying to over communicate from the time you're pre-approved until the time you get under contract. A lot of lenders are like, you're pre-approved, just call me when you're under contract. Well, in between there, we feel like that's where a lot of the magic happens. You go to look at a house, you really like it, but you don't know what the payments are going to be. You don't know what the rates are on that day. The taxes are different than the first example. Now you want to look at different options because you've opened your mind to these different. So we want to run scenarios for you before you sign a contract. So we're keeping communication wide open at that point. The other thing is, once you're under contract, to get you from under contract to the settlement table, there's a lot that needs to be done. We're going to work with you step by step with a lot of communication. After settlement, anything you get in the mail that looks strange, I'll tell you what looks strange to everybody is the tax bill that comes in the mail. The tax bill, it's bright colors, looks very official, and it says your property taxes have not been paid. The first time you get that bill, you're going to say, I thought you said you were paying them.
Yeah.
Well, just send the bill, scan it, send it to us. We'll look at it. We'll reassure you that is, because 99% of the time people escrow, we'll reassure you that is the case. So it's being in communication. This is the largest purchase you'll ever make in your life. We're going to be there for you before you're under contract, through the process, and after settlement.
I think I've told you this story before on the show at some point, but the first time I bought a home, I'd never been through the process before, and I don't even remember how I came across the mortgage lender that I used. May have been somebody that was recommended to me. I honestly don't remember, but it was a guy that it was okay. Like I didn't know what to expect, right? So I didn't really have a kind of a bar to measure by. But I just remember, to me, that still sticks out, and this has been almost 20 years at this point, that the lack of communication, and just a simple thing as before we were going to closing, the day we were going to closing, I didn't even know the number, how much I was going to owe at closing until like a couple hours before we were going to meet. And I was like trying to follow up with them, like, hey, what's the number? What do I need to have prepared? Just constantly just asking questions, and was just getting we'll be in touch, or sometimes there's no answer at all until finally like, hey, here's the number. But I just remember thinking, like, not having someone that you can just communicate with directly and just have that back and forth with and get honest and direct answers, it leaves you kind of feel like you're hanging, right? Because you said it's the biggest purchase that most people are going to make in their lifetime, and the last thing you want to do is feel uncomfortable about the money that you're about to spend.
Yeah, and our goal is to over communicate to make sure that you've got a path to walk down the whole way, because most people probably go through the mortgage process 5, 6, 7 times in their life. It's a very detailed process. There's a million data points. There's a lot to do. You could never fully understand that doing it 7 times, right? So it's like you take your car to a mechanic 7 times a year. So after a couple of bad experiences, hey, it's a good idea to have a really good mechanic. But because you're not exposed to mortgages the way that you're exposed to auto mechanics, sometimes you just people assume like a mortgage is a mortgage is a mortgage. They're all the same. It's standardized, and it's anything but that.
Right. A lender is a lender is a lender. That's what probably most people think too, which is also not the case. So communication, relationships, education is another big part of it too, right? Because this show is a great example of that. We do the show every month, and we talk about different topics, not only that are happening right now, right, that are current, but also get into a lot of the details on what to expect from a mortgage process. Some terms that you need to know, the mortgage options that are available to you, how your credit score can affect things, right? So there are a lot of different things that we try to educate people on in this process. But beyond that, just in a meeting with an individual client and going through that process, not only are you asking a lot of questions, you're also walking them through the process and making sure they're educated and understand everything they're getting into.
Yeah, and what we say is we're going to make this process educational. Not so that you're going to be able to teach a course on it when you're done, but as you're moving through the stages, the light bulb's going off, we've explained it in a way that you can identify and you understand what's going on. When you connect with the information that way, it's going to help allay your fears. You're going to be less fearful, which is going to help you to make better decisions, because our role here is to help. The ultimate decisions are all the borrower's decisions, the people borrowing the money or the buyer of the house. We're just here to help facilitate the best decisions. We think with them having good information, they're always going to make the best decision possible. So education is, central to what we do. We have first-time home buyer seminars, and we always do a loan consultation after everybody's pre-approved. It's the third step in our process is we want to make sure that we go over this information in detail. Again, I say it a lot, and it can't be said enough, is the largest purchase you're ever going to make and the biggest debt encumbrance you'll ever have in your life. You might want a little bit of extra information.
Yeah, knowing what you're getting into, and a couple small tweaks or changes might make a difference, a significant difference monthly in what you owe. So understanding that is so important. But again, these things are benefits that maybe don't get publicized that much, right? Relationships, communication, education, but 3 core reasons why you work with a lender and find someone that fits you. Cross Country Mortgage can help you with this process. You kind of understand a little bit about the way Bill works with his clients. But if you want to follow up with him, if you want to get that, take advantage of that consultation that they offer anyone that wants to sit down 15 minutes, start to kind of feel out where you are, what you're looking for, what your goals are. You can always do that by calling 484-352-4151. And Bill, just kind of quickly, that 15-minute consultation, what all does that consist of for somebody that wants to hop in and talk to you for the first time?
Yeah, so the 15-minute consultation is usually almost always over the phone, and we are asking questions so that we can get the details and create an outline for your goals. So, of course, we know your goal is either to refinance your loan or to buy a house, but under those umbrellas, there's a lot of details. There's a lot of specifics that would help us to understand how to best serve you. So that first phone call is to dig into those questions, understand where you are today, understand where you're trying to get to, and trying to pave a path between the 2 points. Again,
you can touch 484-352-4151 or just visit us online, smartmortgageshow.com.
It's time for the Mortgage Mailbag.
All right, it's time for the Mortgage Mailbag. Bill, we like to do this here on the show is we take your questions. So whatever you have on your mind, you can send it our way and go back through past shows. We answer a lot of great questions that come in from people that might apply to your situation as well. And if you have questions for us, again, smartmortgageshow.com, or you can call Bill at 484-352-4151 and get in touch with Cross Country Mortgage. All right, Bill, first one here for you today. I think it's a good one for people that like to get online, surf around, figure out, hey, what kind of house can I afford, right? Let me plug in some numbers and get an idea of what kind of loan I can get. What's your favorite mortgage calculator? And can you effectively use that at all to help you plan for home purchase?
So let's take the second question first. Can you effectively use a calculator on your own to plan for the purchase of a home? So I think that you can, with some guidance and some, guardrails from a mortgage professional. Now, if you're just playing around online and you're just trying to get within the ballpark, you can certainly do that on your own. If you're trying to get information that is close to what it's going to be in reality, then you probably need some help from the lender, because you're going to need to know where the rates really are. It might be hard to find that information because a lot of the rates are going to be just teaser rates online, or maybe they're charging 3 points and you're not looking to pay points. So getting an idea where the rate is, because rate obviously has a big impact on payment. And then if you're putting less than 20% down, that's where it gets a little trickier, because you're going to have to include a factor for PMI. And that factor is determined by a lot of different variables. So to know the factor would almost be impossible if you weren't a mortgage professional. But that being said, we do help people and say, hey, here's your calculator, here's your factor, just keep this in mind, and then they can kind of play around on their own. On our website, we do have a lot of calculators for our clients to use. So there's definitely some things in there that can help you to at least, start the process and kind of outline what it is you're looking to accomplish.
Very good. There you go. Thank you for that question. It's a good one too. I know a lot of people like to get out there and just find a home that they know they probably can't afford, but let me just see what that mortgage might cost me. But give you a good starting point, but you definitely want to sit down with a lender to make sure you know exactly what you might owe. All right, here's one more for you, Bill, for today. I read an article that said more people are using co-borrowers to buy homes. My dad is thinking of co-signing a home with me to help qualify for better rates. Is that a bad idea?
There's two sides to the coin, the co-borrower and the co-signer. Okay, so as a co-borrower, meaning the person who is buying the house and that's going to live in the house, they're getting an advantage because the co-signer is helping them with income, which is the only thing a co-signer can help with. They cannot help with credit. So if you have a credit issue, a co-signer won't correct that. But if you have an income issue, adding the income of the co-signer, and you also have to take into consideration their debts. So if that co-signer is sufficiently obligated themselves, they probably won't help you much. But if they're in a good financial position and the incomes far outweigh the debts, then a co-signer can be a really great way to help somebody qualify. If you are the actual cosigner, you just need to be aware of what it could mean for you in that, God forbid, the borrower, the person who you've helped, if they stop making the payment, it would be really bad for your credit. Okay. If there's a foreclosure, it would be really bad for your credit. So whoever you're co-signing for, you need to have faith and trust in their financial capabilities. But it is something that we look into all the time, and we actually have co-signer scenarios more than you would think, and it is a great way to help with a debt-to-income ratio problem.
All right, great question then. So maybe something to talk with a little bit further and see what your options are. But obviously some things to also be concerned about and potential problems down the road. So thanks for those two questions. If you have questions for us, we love to hear from you. We love to tackle your questions and concerns as it relates to the home buying process. And we like to share stories here as well. So we appreciate you watching the Smart Mortgage Show. We have more videos to come, more podcasts to come. Please subscribe wherever it is you watch. And Bill, we'll talk to you again soon.
Thank you, Ben. Thanks, everybody. Please reach out with any questions. We're always here to help.
Again, that number 484-352-4151 or log on smartmortgageshow.com. This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.